Did you anticipate that the people skills part of starting a business and running a business would be as important as they've turned out to be?
No. Initially, I thought, I come up with a brilliant idea, and overnight we would be a multi-billion-dollar
Pounding down
hedge
your
fund.
door.
Welcome to an Encore podcast presentation from Forbes Books at ForbesBooks.com.
I'm here at the Gaining the Edge Hedge Fund Conference sponsored by Agecroft Partners. We're in New York City, and I'm with Dr. Tillmann Sachs. He's the CIO and head of research for J8 Capital Management, LLP. Their website is J8, the number 8, j8capital.com. Dr. Sachs, welcome.
Thank you.
You are here at the Gaining the Edge Hedge Fund Conference. Is this your first conference?
That is my first conference of this type here in New York, yes.
And what drew you to the conference?
Well, I was in Chicago earlier this year at the CTA Expo. And a gentleman, he strongly suggested to come to this conference because of the quality of investors and institutional investors which we are seeking for our investment strategy.
Now, you're here from the UK, right? From
Correct,
London.
yes.
When you visit events like this here in the U.S., obviously you can't speak to this one because it's just starting, but you were at an event in Chicago as well. How do these events compare to similar types of events you might visit in Europe?
It's not too different. It's very well organized. What I appreciate here is the clear distinction, also in colors, between investors and managers, and it's really well balanced. I feel that there's good opportunity to talk to many very exciting investment opportunities in investors here. So,
is the hedge fund industry similar in Europe to the U.S., or are there distinctions that it would be useful for others to hear about?
I think one key distinction I can make out is that in the U.S., it's especially for our type of strategy, it's very strongly driven by segregated managed accounts. Whereas in Europe, investment goes primarily through investment funds.
Yes. And so you mentioned our strategy. What is the strategy at J8 Capital Management?
We are a managed futures manager, or CTA, you can call it, out of London. We only trade commodity futures, currency futures, and government bond futures. So no equity futures. We have no equity exposure whatsoever with a multi-strategy approach. So we use trend following, term structure arbitrage, carry trades and inventory basis trades in a risk-weighted portfolio, and we manage the portfolio to target volatility of 10%. And we've been trading that one live for close to 5 years now, and we've been in business since 2012.
What is the backstory on coming up with a strategy like that in the case of J8 Capital Management? Was it a light bulb moment for you or your team? Was it an evolutionary process? Was there some new data that became available that made it apparent that this might be a viable strategy? What is the genesis of the beginning of the company and the embracing of this strategy?
I think it's more the evolutionary approach. When I did my PhD in Singapore, I used artificial intelligence to quantify political risks in infrastructure projects. And then during my career in investment banks with AIG, UBS, and Barclays, I was introduced to the commodity index space and the risk premium index space. And throughout the years, I always started to rebuild the strategies and build my own strategies. And I figured that probably if I combine the rigorous research process that I've learned during my PhD with what I've learned in the banking sector, I can come up with better models. And that was really the genesis of our program and what we are doing.
So it's interesting because as you were describing this, the word that came to mind, and then you talked about your PhD, the word that came to mind was hypothesis. You had a hypothesis, it sounds
correct,
like, and then you began to dig into the data and use AI to confirm that the hypothesis was really a valid one.
Yeah.
So was this the first time that you had started your own firm?
Yes, it is.
And how has that been for you, both to be the one who evolved the strategy, but also to be starting the company?
Oh, it's a wonderful ride with a lot of ups and also downs. Yeah. I would say it has to do a lot with conviction. I'm absolutely convinced that what we are doing does make sense and is good in the long run, and that we do provide good value for investors.
Yes.
But it is, especially in this environment, where everything gravitates towards the larger institutions.
Yes.
It's extremely difficult as an upcoming emerging manager to set your footprint and to be recognized.
Yes.
And to stand out against the big ones. And I mean, if I put myself in the shoe of an investor, I do understand it, right? Because there's only that much time you have in a day to analyze somebody. So,
but there's also a sense of security. Large often equals a sense of security. I'm not saying it is more secure, but there might be a sense of security.
I I think you're absolutely right. It's the sense of security. I don't necessarily agree that they are actually better, because what we can do is, with a small team, and we're a team of 3, we have very thorough processes in terms of, pre-trade compliance, operations, reconciliation processes, reporting processes, and it's very tightly overlooked. And also the research is very, very rigorous. We publish in peer-reviewed papers. There's no flim of the eye decision, if you want to put it this way. I do know also from larger managers that are household names, even though they claim that they're systematic, that there are quite some discretionary decisions going on how we actually do the asset allocation within the portfolios. And that is something that we just don't do.
So you're saying in your environment, there is no discretionary decisions being made. It's all data-driven.
Purely data-driven.
One of the questions I want to ask you is, when you started your firm, and the firm is J8 Capital Management, it's J8capital.com. I'm talking with Dr. Tillmann Sachs. He's the CIO and head of research, and I think it's fair to say also founder or co-founder?
That's correct.
Okay.
Yes, I'm the founder.
One of my questions is, when you started your firm, did you anticipate that the people skills part of starting a business and running a business would be as important as they've turned out to be?
No. Initially, I thought, I come up with a brilliant idea. I show some track record, and overnight we would be a multi-billion-dollar
pounding down
hedge
your
fund.
door. Yes.
That has not really materialized that way. But we are getting traction. We are getting interest. We are increasing assets, and there's a space for our strategy. And you learn a lot along the way.
Yes. It must be fascinating when the business side of your business, or what you do and your expertise, is you've eliminated all discretionary decision making. And on the other hand, as we both know, when you're dealing with people, it's almost all discretionary, right? I mean, you have in your head some sense of history of dealing with other people and how to make those relationships as effective as possible. But mostly in the moment, you're making the best call, and it's completely discretionary, or almost completely discretionary.
True. So what we try to convince investors with is with our rigorous research process and our rigorous operations, and thereby give them the confidence that our strategies do work on the long run.
Yes.
And it's fair to say that, if you look at a 2-month period or 3-month period, it may be disappointing.
Yeah.
But if you look on the long-term performance, it is convincing.
Yeah.
And that's what we bring to the table, is that we take emotions out of the decision-making process, and we have a rigorous research process behind it, and it's validated by peer-reviewed journals, papers, etc., and by the track record.
Yes. So, when you think about your company, J8 Capital Management, and you're looking ahead because you're doing all of your decision-making using data, what does the data tell you about the future of your firm?
Oh, that is a tricky one.
Yeah, I know. That's why I asked.
If I could predict the future, it would be...
well, but I'm saying the future of your business, not necessarily the future of your investments.
Yeah. Well...
I mean, do you think you'll grow from 3 to 10 to 30 to 50 to 100, or is your goal to keep it as a boutique?
No, obviously we want to grow it fairly large, and the strategy is very scalable because we use the very liquid futures only.
Yes.
But in terms of the outlook, if you look at the financial markets and the environment we're in, what we see is a further compression of the interest rates, of the spreads. And that is not necessarily good for what we do, because a lot of business opportunities in global markets in general are driven by arbitrage opportunities between two different sets of assets. And they are largely driven by interest rate differentials. And if those go away, which we have seen in the past few years, then also the investment opportunities seem to go away. And that's, of course, not good, right, for the performance and for building the business. But what I see at the moment is, with our strategies, that some strategies struggle and other sub-strategies are doing extremely well in this environment. So suddenly we see other trends materializing which weren't there for a long time, and now suddenly they kick in. And that is the benefit of having a well-diversified value proposition. So we are not going out to say we have a one-trick pony, winner all the time. We are going out to say, look, we have a subset of 6 sub-strategies. Some are doing great, some are doing not so good in a year, but overall you have a balanced portfolio approach.
Right. And it's interesting. I would also imagine that since you're basing your decisions on data, if you're objective about the data, then you're never going to marry a particular hypothesis. You're going to let the hypothesis continue to prove itself or not. And if it's not proving itself, you're going to find other hypotheses in the data to create new strategies that are related to and aligned to what you're already doing.
Well, that is absolutely right. I mean, we are continuously researching, we are continuously working on the strategies, but we are not always changing the strategies. That's very important.
Yes.
So what we don't do is that overnight we suddenly reshuffle the entire portfolio.
Yes.
No way. But the set that we are trading now is pretty fairly unchanged for the last 5 years. We did some minor modifications to make it simpler, to take complexity out. Because what I figure is the more complex a strategy is, the easier it can be to overcomplicate and run in the wrong direction. And it's better to have a simple strategy that's easy to understand and then get the diversification by having model risk diversification and asset risk diversification. And with this matrix approach, that's where we get the stability in our overall performance.
I'm curious to know, and this is, I think, my last question for you. When you're talking to new investors, how deep do they tend to want to go in understanding what your strategy is, how it works, and why it works?
Very deep, because we are still a young and small firm.
Yes.
So the investors that tend to invest is those investors that do understand the space fairly well, and they want to know exactly what's going on. And they ask the right questions, and we are able to provide the right answers. So we have developed a detailed methodology handbook where everything is written down in formulas, how everything works, and we share this with investors for the due diligence process. We have flowcharts to visualize how the decision-making works of the system, and we share that also with investors. So the problem is that very often CTAs, or what we do, the systematic funds, are perceived from the outside as black boxes, even though it is the most transparent glass box possible because everything is predefined.
In other words, the algorithm is making we can explain the algorithm, and the algorithm is going to make the choices, not us.
And that's
going back to the discretionary decisions, of which there are none.
Exactly, because with the true black box is the discretionary manager that wakes up one day, has a bad day, and makes a bad decision.
Yeah.
And that's what cannot happen with us.
Yes. It's very interesting. The company is J8 Capital Management. They're at j8capital.com, j8capital.com. He's Dr. Tillmann Sachs. He's the CIO and head of research and also founder of the company. Dr. Sachs, thank you so much for joining us.
Thank you very much for this opportunity.
Thank you for listening to this Encore podcast presentation from Forbes Books at forbesbooks.com.